All right, we're going to talk about something that is, no joke, the absolute bedrock of your financial security. But it's probably not what you're thinking. We're talking about disability insurance, and I want you to completely reframe how you think about it. It's not an expense, it's like a suit of armor for your financial life. So, let's dive right in.
Okay, let's start with a tough question. I mean, really think about this. If you got sick or hurt and couldn't work tomorrow, how would you pay your rent? What about your mortgage, your car payment, all the bills? Yeah, for most of us, that silence right there, it's pretty unsettling, isn't it?
And that right there is exactly what this is all about. This isn't just some boring insurance policy. Think of it as income protection. It's a shield, plain and simple. A shield for what is, without a doubt, your single most valuable asset. And no, it's not your house or your car. It's your ability to get up every single day and earn a paycheck.
Okay, so if we're gonna build this shield, you gotta know what it's made of, right? And don't worry, this isn't gonna get super complicated, I promise. Just by understanding a few key terms, you're gonna have all the power to make the right call.
First thing you need to know is something called the elimination period. It sounds super technical, but really it's just a fancy way of saying the waiting period. It's how long you have to wait after you get disabled before those benefit checks start rolling in. And here's the key. The longer you're willing to wait, say 90 days versus 30 days, the cheaper your monthly premium is going to be. It's a simple trade-off, you know? A little patience now for a lower cost later.
All right, next up is the benefit period. This one's easy. It's just how long those payments are going to last once they start. You could go for a shorter term, maybe 5 years, just to get you through a really rough patch. Or you could get coverage that lasts all the way until you retire. This choice right here, this is what really determines how strong your financial safety net is.
Okay, now, I need you to really lean in for this one, because this might be the single most important detail in a whole policy. On one side, you've got own occupation. This means you get paid if you can't do your specific job. Think about a surgeon who injures their hand. They can't operate anymore, so they get paid. Now, on the other side, you have any occupation. This is way, way stricter. It only pays out if you can't do any job you're reasonably qualified for. So for that surgeon, if they could still teach or consult, they might not get paid. This distinction, it's everything.
All right, you've got the lingo down. You're practically an expert. So the big question is, where do you actually go to get this protection? Let's get into the game plan. There are basically 4 main ways to get covered. First, you can go to an independent broker. Honestly, this is kind of like having a personal shopper, but for insurance. They don't work for just one company, so their job is to look at the entire market and find the absolute best policy for you. This is a huge help, especially if you're in a specialized profession or have any kind of health history to navigate. Option number 2 is an online marketplace. Think of this as the fast and easy route. You fill out one form online and boom, you get a bunch of side-by-side quotes from different companies. It's a fantastic way to just get a quick lay of the land and a ballpark idea of what you'd be looking at, cost-wise. Third strategy, you can go directly to a specific insurance company, maybe one you already have your car or home insurance with. The pro here is obvious, right? You're dealing with a brand you already know and trust. But, and this is a big but, you're only seeing their one option. You have no idea if you're missing out on a much, much better deal somewhere else. And finally, number 4, the plan you might already have through your job, your employer's group plan. You should always check this out first because it's often super cheap or even totally free. But, and please hear this loud and clear, you have to understand its limitations. The coverage is usually pretty basic, and the biggest kicker is it's not portable. That means if you leave your job, that coverage just disappears. Poof, gone. Relying only on this is probably the number 1 mistake people make. So you've probably heard of other types of insurance that kind of sound like this one, and it's super easy to get them all mixed up. They all have very, very different jobs, so let's clear up the confusion once and for all. It's time for an insurance showdown. Okay, this chart right here makes it crystal clear. Look at that top line. Disability insurance is all about one thing, and one thing only: protecting your income. That's its whole job. The other 2, accident and long-term care, they're for paying for specific expenses, things like hospital bills after an accident or the cost of a nursing home. So if you remember nothing else, remember this: disability insurance is for your paycheck. Full stop. All right, I know what you're probably thinking. This sounds great, this sounds essential, but how in the world do I afford it? Totally fair question. So let's get super practical and talk about how you can actually fine-tune this thing to fit your budget. To make this a little more real, let's talk about Sarah.
She's a 35-year-old manager making about $80,000 a year. And, she wants to make sure that her income, her lifeline, is totally safe no matter what happens. This is a super common situation, right?
So typically, an insurer will cover about 60% of your income. For Sarah, that works out to a potential benefit of $4,000 a month, tax-free. I mean, think about that. $4,000 every single month. That is a powerful safety net that pays the mortgage, keeps the lights on, and covers all the other bills.
And what's the price for that incredible peace of mind? For Sarah, it's about $120 a month. Let's pause on that for a second. For less than what a lot of us pay for streaming services and coffee, she is protecting a $4,000 a month income stream. That is some serious financial leverage right there.
So how can you get that premium as low as possible? Well, this right here is your cheat sheet. You can see all the levers you can pull. For instance, Sarah's premium is based on that 90-day waiting period we talked about earlier. She could have made it even cheaper by choosing a 180-day wait, but she wanted to get the money faster if she needed it. It's all about finding that perfect balance, that trade-off that works for you and your finances. And all this brings us back to one final and honestly the most important question of all. Look, we all insure our homes, we insure our cars, but have we insured the one thing, the engine that pays for all of it? Your ability to earn an income is by far your most valuable financial asset. So the real question you have to ask yourself is it protected?